not sleep at all on Wednesday evening slash Thursday because I caught this very wonderful 24-hour bug, which actually pretty much ended up leading me into to Friday as well, and today I'm feeling fantastic. Uh, I've worked seminars where I was completely sick and I couldn't do, I still showed up and I still presented, but there was no way possible that on Thursday evening I was going to be able to hold a webinar unless you didn't mind I was on the washroom the entire time, and I'm sure that you wouldn't have appreciated that. Anyways, guys, I'm still a little bit, my esophagus here is completely burnt, and I'm still struggling a little bit here, but I'm going to be fine. I promised I would be doing this, and I want to do this because I love holding some little mini educational videos for you guys. So thank you all for being here. We've got quite a amazing event happening this evening, or today actually I should say, because we're going to be talking a lot about what is the current Canadian outcome, how does it look, what is the outlook actually I should be saying, and what should you be doing about it. And then we're going to go a little more positive, a lot more positive actually, and we're going to talk about what emerging markets are, what a sexy market is, how should you diversify between both, what are you looking for in an emerging market, what are you looking for in a sexy market, and then we're going to go on the computer and start buying some deals together. I mean, I keep getting wonderful comments from everybody saying, wow, this is so amazing. I love when you analyze some deals online with us. So I'm going to go and do that, and then I'm going to give you an action plan on how to get started right now. So without further ado, let's start this presentation that's not working. Fantastic. Here we go. So guys, I am sorry to be the bearer of bad news, but real estate is cyclical. Okay? It seems like every single time there's a real estate crash, people seem to forget it came from a peak maybe 20 years before. And then it's a surprise to everybody, oh my gosh, real estate is crashing again. And then, of course, it goes back up. Since the 1800s, guys, I could have continued this slide here and going, this was 1974. And before 1974, guess what? There was a peak in the 1940s, or sorry, 50s actually. But people seem to forget all the time. And, going on this super negativity here, let me be the bearer of bad news again. You're going to die one day. What do I mean by that? Humans have a cycle. We're born and then we die. Is it a surprise? Absolutely not. We know we have a certain life expectancy. And here's what I'm getting at. Every single thing, real estate, has a cycle, folks, okay? And we can't forget about these cycles. And all these cycles are driven by the same economic facts as the previous cycles. So let's take a look at this for fun, right? This was, whoops, I lost my presentation here. Hello, presentation. All right, now we're going forward. Okay, sorry guys. So this here was the 1970s, okay? 1974-ish, if I recall correctly. And then real estate went up dramatically. Jump, 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 jump. It was actually one of the fastest appreciation curves ever. And then 1989 came. Everything was doing fantastic, and boom, a big savings and loan scandal happened. People were borrowing way too much money. Exactly what's going on right now, but I'll get to that in a few seconds. And then all of a sudden, real estate crashed. Do you think anybody was thinking, oh my gosh, real estate's going to crash? It's booming. It's been booming forever now. Real estate is doing fantastic. And of course, real estate crashed. And then it bottomed out about 1996. And then in 1996, real estate went up in a steady curve since then. So, could we have predicted all of this? And the answer is 100% yes. And now you may be wondering, Steve, why are you telling me right now that 2011 was the peak? And I'm actually telling you, could have been actually a little more now. But I'll tell you, based on economic facts, okay? I don't want to scare you guys. The idea of this presentation, guys, is not to be negative, okay? I am the most positive person in the world, and we're going to talk about what can you do to protect yourself more than, oh my gosh, it's time to freak out, okay? So anyways, I just wanted to show you guys, real estate is cyclical, and guess what? Once it crashes, it'll take 10, 15 years. Guess what? it's going to go back up again, okay? So it's not new, it's not the first time, and it's not the last time. So here I am a couple of weeks ago. I can't remember which airport. I'm at an airport, and I say McLean's Magazine. I take a look at the cover, and it says, "You're about to get burnt. Canada looks exactly like the U.S. before its devastating house crash. Maybe even worse. Why it's officially time to panic." So I'm not too crazy about the officially time to panic part, but Maclean's Magazine, folks, is one of the, top Canadian magazines. This was published in March 2012. Well, here I am. I'm the kind of person that needs statistical facts, okay? I don't panic. I don't do anything based on emotions. I want to see what are the facts. Why are they claiming that real estate is going to crash? So that got me diving into doing some massive research at the beginning of the week. And I'm going to tell you now, if people... No, let me hold on to that, okay? I don't want to freak anybody out. So here I am. I did some research, okay? So I went and found the article in Maclean's Magazine, "Time to Panic About the Housing Market, Why Everyone is Ignoring This Unfolding Disaster." So this was published February 28th, 2012. So here's what I found, folks. I didn't even do my PowerPoint slides perfectly, but it doesn't matter here. So here's the statistics that we all need to know. The average Canadian home now costs 5 times the average income, well above the multiple of 3 that is considered affordable. So the affordable price point for housing, and even in my business on the U.S. side for tenants need to make 3 times what my rents are. Well, to buy a house, if you're going to sell a house to someone, lenders used to say, well, if you're going to buy a house and get a mortgage for $300,000, theoretically, your household income should be at least $100,000. Well, now they're saying that currently, the way we are, the housing costs $500,000 per every $100,000 household income. So between 1996, which was the bottomed out, to 2009, this is because that's the statistic I was able to find, the average house income rose on average of 25%. Well, over that same time period, the average house price went up 200%. So while our income went up 25%, the houses went up 200%. That's huge. So then continuing on, and this is something that I talked about in my last webinar about 2 weeks ago. In 2005, the average American owned $1.3 for every, okay, I'm not saying this properly, but every American spent $130 for every $100 earned, which is a big deal. Think about it. You get $1, you spent $130. Well, 2005 was the peak of the real estate market in the States, and then it crashed dramatically. Well, where is Canada right now? I'm sure you already read it. Canadians now, last week, guys, it was $1.51. Now, 2 weeks later, we're at $1.53. This is insane. We are growing debt like you can't imagine. So what I'm saying here is the Canadians right now are making $1, spending $1.53. Okay? Think about what this could potentially do to our real estate market. Let's keep going. So wages aren't going up. Credit card levels aren't going up. But the Canadian consumers has increased their spendings by dipping into their home equity. So they don't have money, but they're taking the equity out of their home. As of last year, Canadians had pulled roughly $220 billion from their equity. So as a line of credit. Now remember this number, okay? So a per capita amount 3 times larger than what the U.S. was at its peak. So let me repeat that. Again, history it repeats itself, guys, okay? It's all statistical. If U.S. crashed, everybody seems to think it's because of the subprime crap, right? And it's not just because of the subprime. Because Americans were borrowing too much and were spending money that they didn't have. It was based on their equity. Well, right now we're saying that Canada is 3 times worse right now than the U.S., okay? And here's the biggest problem, is that Canadians rely way too much on housing for income. Meaning 7.4% of the labor force right now is in new construction. Well, Canada's overbuilding as we speak. So if it's overbuilding, what's going to happen in a year from now? The construction boom is going to stop, just like it happened in the States in 2006, 2007. Well, if that stops, our unemployment rate can go down by up to 7.4%. Now, if you calculate real estate agents, mortgage brokers, insurance companies, and any sector that relies on real estate, there's an additional 27% of the workforce. So in total, we're talking about 35% of the workforce is relying on housing. So if housing crashes, what will happen to the workforce? Now take a look at this statistic here. In the US, those same numbers peaked at 24% pre-real estate crash. So we are way worse than the US was. So the bottom line, guys, homes now cost 5 times our average income. Our salaries went up 25% while the real estate went up 200%. The American was spending $1.3 for every dollars earned, and that was way too much, and the real estate crashed. And we are at 1.53%, or not percent, dollar for every dollar earned right now. So Canadians have increased to their home equity lines, borrowing 3 times what the US was before its crash. So this sounds all gloomy, okay, folks? But here's what I really want to go. So let's turn it a little positive here. The reason I'm sharing this statistic is to wake us up. I've got people that say, you know what, Steve, I want to buy some real estate in the States, but I want to diversify in Canada at the same time. Well, we're going to talk about emerging markets right now. When do you think it's time to buy real estate? When it's up or when it's down? And everybody knows it's when it's down, okay? So let's go to, or what can we do? And that's what I'm getting in right now. So before we even talk about that, let me talk to you guys about emerging markets. This is crucial to understand. So about 5-6 years ago, I'd say now, it was in 2006, so whatever, 5-6 years. 2006, I started studying the economies around real estate because I learned that real estate was cyclical and that every single time there was a boom, there comes a crash. And every time there's a crash, there's a boom that goes up twice as much. And that is a 100% normal. Okay? So here's what we started looking at, okay? And I'm not going to go in depth here. I actually taught this in universities, okay? And the funny part is, I've never been in universities except for teaching. But anyways, as I got really, really good at predicting emerging markets and detecting when a market's going to grow, when a market's going to crash, the news media has really liked what I was talking about. So you guys are going to get this little presentation in a nutshell, okay? There's so much more to talk about, but I'm going to keep it extremely simple. So what I want to talk about right now is what emerging markets are. So there are 3 phases in real estate. There's expansion, there's the decline, and then the one that everybody seems to forget is there's absorption. Well, in the absorption phase, that's after a crash, okay? So when a real estate market crashes, well, during this time frame here, there's what's called absorption, okay? So keep that in mind. Now, I'm going to bring you to the principles of supply and demand. Supply and demand is very important to understand. The more people want something, the less of that something there will be in flow of an economy. Well, when people notice that there's a lack thereof, they become frantic and they want to pay more and more and more for that same object. Well, supply and demand in any capitalist society controls any object. So let's bring it back to real estate right now. This brings us into the third part that I want to talk about, buyer's markets and sellers markets. Well, buyers markets, we all know that there's a huge amount of supply and the buyers have the upper hand because there's one buyer for every 10 homes available. Well, if we're to turn that around, on a seller's market, the sellers have the upper hand. So there's one house for sale for 10 buyers, so people become competitive. So here comes my emerging markets theory. So you've got buyers markets and you've got sellers markets. Well, as I did more in-depth research, we noticed, and guys, I didn't invent this, by the way, okay? I'm not stealing credit here. I learned it from multiple different sources and put my own definition around it. Well, I learned that within every buyer's market, there are 2 cycles. And within every seller's market, there are 2 cycles. Well, let's take a look at buyer's market. There's a buyer's market phase 1, buyer's market phase 2, seller's market phase 1, and seller's market phase 2. Well, let's take a look at this. This here is the peak. Let's talk about America right now. This is the peak of the American real estate, February 2005. I apologize, guys, I'm telling you this, but I may repeat myself in a few minutes, but anyways, this is the peak 2005. And then in 2005, in February, for about a year, the real estate started going downward slant, but nobody really noticed until 2000, I think it was October 2006 or 7. It was October 2007. I'm sitting in Atlanta, and this is while I was doing my research on starting to buy homes in Atlanta and everything. And here I am sitting in the Platinum Lounge, or whatever that bullshit is called up there, the Snob Lounge I like to call it, and I'm watching TV with my wife. We're having a coffee. And that is the day, October 2007. Don't quote me, I can't remember exact the date, but I'm almost guaranteed it was October 2007. The stock market crashed because people realized that there are so much money spent on the equity of homes. And all of a sudden, people realized and woke up, noticed that real estate is not as solid as everybody thought, because everybody seems to forget that it's cyclical. So long story short, real estate tumbled fast, which brought us into, actually I should really redo this slide because this here should be about right here. Okay, so anyways, then it brings us into a buyer's market phase 1. Buyer's market phase 1 is when the markets are crashing and are crashing fast. People are noticing, based on the outside world, their emotions are telling them, oh my gosh, real estate sucks. What have we done? Okay, so long story short, the economy goes down. Okay, one thing I want you guys to notice is that from peak to peak, or from bottom to bottom, this is about 20 years. Okay, this is about 20 years worth. So please notice that from the peak here to there, this is a good 6 to 7 years. Look at it now, right? America's about right here, and we'll talk about that in a second. But how long has it been since the crash of 2005, right? It's been about, what are we, 2005, 2012? Let me do my quick math here. 7 years, exactly what I'm telling you. So long story short, markets crash, okay? So nothing is happening. Unemployment rises in the dual digits, exactly like it happened. Inventory of home floods the markets. Construction gets stopped at an all-time low. No construction's happening, right? Remember last week or 2 weeks ago when I taught you guys about the housing shortage crisis? Well, long story short, here's what, let me bring you to my next, there we go, okay. So here, what starts happening right here is nobody wants to talk about real estate because it crashed, right? If I was to ask you guys right now, who on our webinar, we've got about, holy crap, 978 people right now that's listening to us. If I was to ask, let's call it 1,000 people, who here is excited about investing in the stock market? Out of 1,000, I may have about 50 to 60 people, right? The Canadian population right now, 5 to 6% are interested in investing in the stock market. Well, here's the reason why. People tell me, well, it's vulnerable, it's volatile, but here's what the main reason is. We got burnt. We got burnt. Canadians don't want to invest back in the markets because we got burnt. Well, if we got burnt, right, stock markets, guys, they're back to what they were October 2007. They're booming. They're doing amazing. Yeah, it's a little volatile. And yeah, we're going to be having another crash in the next year or two, again, based on economic stats. I'm not getting into that. But no matter what, it's still a very good, solid investment. I've done a lot of money in the stock market over the past 2 years. Well, here's the thing that you have to understand. It's the same concept with real estate. Americans, when they come in a buyer's market phase 2, they have absolutely no will or desire to invest into real estate because they got burnt. Folks, we've been told, invest in a piece of real estate and for the rest of your life, you're going to appreciate and you'll be able to retire on that. Well, here's the deal. Right now, nobody can retire on their real estate because it crashed. Well, at this point right here, okay, everybody's so negative. Nobody likes real estate. Well, sorry, folks. Getting a little dry here. There's one little indicator that starts happening. Job growth. Everybody's negative, but nobody pays attention that Google is announcing a 1 billion new job created in this little town called Baton Rouge, Louisiana. Now, of course, I'm exaggerating, but still, what is that going to create? Population growth. Okay, so guys, it's very hard here. I'm teaching you guys without my whiteboard. When I have my whiteboard, I can teach you and draw you and keep you interactive. So I really hope that you're an auditive crowd today and can really listen to me well. Well, here, okay, people start announcing that they're going to be there's job growth. So 5,000 new jobs created here, 10,000 new jobs created there. Well, do people start thinking, oh my gosh, there's new job growth, I'm going to go buy a home? And if you tell me yes, why didn't you go back and invest in the stock market? Because there was huge indicators that the stock market was going to explode in appreciation back again. So long story short, I say time to buy here, but let me ask you all a question. When do you know when the bottom has hit bottom? Right? Once it's too late, once it went up. So the time to buy, guys, is around here. So pay attention right here. Okay, this is the time to buy right there when there's job announcement. Because here's one thing in the American population that nobody realizes is Americans are very transient, right? I have a lot of American friends, and I've worked in America with contractors and, you know, tens of thousands of times. And when I ask people, I always ask them, where are you born? I was born in Connecticut. Okay, where'd you go to school? California. Where do you live now? Atlanta. Oh, interesting. Americans are very transient. So here's what I'm telling you. When there's job creation, does it only attract local markets or does it attract the world? Well, not the world, but nation, America. Well, it attracts America. Well, if you're going to move into a new market, your spouse doesn't have a job yet, your kids don't know if they like the school or the area, you don't know if your job's stable, what are you going to do first? You're going to rent. So what happens to rents while you're buying in this area? They go up. But real estates are still crashing. People are still terrified of real estate. But we are smart investors. So as we go and we buy real estate in this area here, we are cash flowing like crazy. So we buy, we cash flow, and for a good 5 to 6 to 7 years, guys, I've been in Atlanta now for 6 to 7 years, and now we're starting to see signs of real estate going up. And of course, am I smarter than anybody? No, I just looked at statistics. So long story short, people are renting. Okay. Now all of a sudden here, I've been working at my job now 5, 6, 7 years. I'm liking my job. My wife, my husband has a great job now. My kids have so many friends. They love their school. Everything's fantastic. Maybe we should start buying a house. So, you know, me and my wife will have a chat. Okay, I think it's time we go out and we buy a house. Real estate, again, very slow, very quiet. People don't realize it's been going up 2, 3%. You know, just very steady. And then my coworkers buy a house because I bought a house. My other coworkers bought another house because they also bought a house. And then houses are starting to sell, but very moderately. Nobody really knows about it. Supply and demand is very equal, right? Very slow. And then all of a sudden, something happens right here. Let me see if I wrote it down. Ah, shit. It's not there. I'm sorry. I did not say poops. Anyways, so all of a sudden, okay, somebody gets involved right here. And that somebody is the media. The media goes into a market and says, oh my gosh, this real estate is booming. Last year went up 4%. This year went up 6%. I think this is a red hot market. So CNN gets in, and guess what they do? They bring the markets up. Skyrocket. And all of a sudden, markets are going up. There's a feeding frenzy. There's a lack of supply. Constructions are an all-time low, but it takes but it takes a long time for the construction to keep up with the demand. Buyers and buyers and buyers, very little sellers. So it creates a feeding frenzy. And then guess what? It's time to sell when you're right here. Because let's talk about a seller's market phase 2. Seller's market phase 2, we're recovering from feeding frenzy. Markets are still going up, but nobody can explain why. Because job growth is non-existent. Construction is stagnant. Nothing's really happening in the market, but sellers are still getting crazy inflated prices. And that, my friends, becomes a problem, because by this point here, people are so ignorant of the facts. $1.53 spent on every buck earned. The housing prices are 5 times what they should be for your income, right? All those little indicators. People are spending on their equity, not spending on income earned. That becomes a major problem. And then time to be very fearful. Okay? And that brings us in today's markets. So again, I wanted you guys to understand these markets because it's extremely cyclical. Now guys, I just explained in 5 minutes, which I usually do in 2.5 hours at my events. But it gives you a really good idea of what emerging markets are, okay? So let's take a look at the Canadian markets again. So 1989, this is the peak of the market. And then it started crashing 1986. And then it went up. And I'm telling you guys right now, okay, I will stake my reputation. Not now. It'll take another year for the whole markets to start being scared. But April 2013 is probably going to be the time where people are going to wake up and prices will start going down. Okay, but our peak prices are right now. So April to the entire next year, that's when the markets are going to start going down. But here's the good news: Canadians are such conservative people that it's going to take an extremely long time for the markets to go down. Okay, so let me just again give you guys time to buy was 1996 to about 2010. Then here we're paying inflated prices. Nobody knows why. Seller's market phase 2, and then it's going to come time to crash. Now, people always come to me. They say, "Steve, I've built such a solid portfolio in Canada. What should I do?" And I'm the last person to tell you to sell because I'm a long-term hold kind of guy. Well, here's what I would like to tell you. Okay, the first things first. You've got to make sure that if you're not planning on selling in the next 5 to 10 years, stick to it. Keep holding that real estate. But if you're planning on, okay, sorry, that did not make any sense. My wife just passed me a note here. Yes, baby. Sorry, guys. Okay, I'm getting back to the screen here. So what I'm saying here is, let's say you bought a piece of a triplex in the glebe, okay, if you're in Ottawa, sorry, in the glebe, and you're asking me, "Steve, now I've built about $200,000 worth of equity in that property. What should I do?" And my first question is, what's your exit strategy? Well, I'm planning on selling in 3 years. Well, if you're planning on selling in 3 years, you must sell now, okay? That 3 years is right now. If you're telling me you can hold this property for the next 15 to 20 years, then you're going to keep it, okay? As a matter of fact, guys, this is, what are we now, March, April, whatever, 2012. And I'm back in Ottawa, so long story short, I'm not going to get too personal, but we moved to Kelowna last year, bought a home over there, bought a ski chalet over there. Now we came back to Ottawa, we're missing our friends, we're missing our family and stuff, so we said, you know what, we want to live in Ottawa as well, after we sold everything. Well, I am going to be buying a piece of real estate here, at the peak of the market. But you know what? My exit strategy is to keep this property for the next 25 years. This is going to be a nice couple $1 million house, right, either by the water, Cumberland or Navan. So I'm going to keep that house forever. So is it smart to buy a house in today's markets? Yes, because I'm going to keep it forever. Versus if I was planning on selling in 3 years, probably would not be a good idea. Okay, so I don't want to scare you guys. Okay, so guys, here's our plan for tonight, as we've been talking for the last hour. But we're going to stop being negative. We're going to get into the positive here. We're going to talk about emerging markets, which we already did, so that's over with. But what I want to talk about as well is what a sexy market is, and I want you guys to understand the diversification between both. We're going to go online and buy some real estate together, and then I'll share with you how to get started tonight. okay? How to get started right now. So, quick recap, okay? I've done a lot of research over the past year, folks, on what is the current the current financial situation of Canadians. And it's horrible, folks. About 31%, which is 11 million people in Canada, don't know how they're going to pay their next bill, okay? Then we've got the average Canadian right now is living paycheck to paycheck and is living at 149% debt to income ratio. I did this PowerPoint in about January and I found the percentage was 149. Now we're at 153 ratio. Then we've got, the average Canadian net worth is about $16,000. And guess what? It's all in their housing. We know the housing markets will crash. So what's going to happen to that average savings? It's going to be disappeared. So my specialty, folks, when people come to my events for 3 full days, I teach people financial freedom. Okay? What financial freedom is your passive income surpasses your expenses. I'm not saying that you can go out and buy yourself a Bentley or a Hummer or a Ferrari or your private jet. I'm saying that you look at your current financial situation right now. Let's say your expenses are $4,000 a month. Well, you've got 4 triplexes out in Charlotte, North Carolina that create $4,000 a month, and for the rest of your life, $4,000 a month in passive income, okay? Meaning after all expenses, you've paid your mortgage, you've paid your maintenance, you've paid your vacancies, you've paid everything, you still have $4,000 coming in from those 4 triplexes, and that covers your lifestyle. So now you can decide to quit your job. You can start getting a nicer home. You can work your way up. So long story short, I'm all about passive income. But before we start, think FedEx. Okay, if you've already heard me talk about this, please be reminded. Paradigms. And what is a paradigm, folks? Everything that we've been taught in the past 25 years, in the past 35 years, how old you are, it does not matter. This bullshit that society teaches us, right? What we hear on the news, oh, real estate's doing fine, right? And that kind of stuff. Or how do you become rich? Work harder, get a higher income, dollars for hours. Well, I'm that kind of person that's going to say you've got to experiment a paradigm shift. Think of the arrow in the FedEx. And what I mean by that is, if you did not see me talk about this in the past, how many times a day do you see FedEx? How many times a day? Okay? Average person will see the logo FedEx twice a day. Well, you probably never noticed that the logo was not FedEx. It was actually the arrow that's right here inside, okay? The arrow. And the arrow, guys, is the actual logo. Well, you just experimented a paradigm shift if you've never seen this before. Meaning, it was there the entire time. I didn't just magically put an arrow in there. It was there the entire time, in front of you. But you had too much bullshit in your mind to show you that there was an arrow in the word FedEx. So all of a sudden, right now, okay? Right now, look at the screen. Everybody listening to me, look at the screen. Please don't look at the arrow. I'm serious here. Don't look at the arrow in the word FedEx. When you go to work tomorrow or next week, whatever, please don't tell your friends when you receive a package of FedEx, I don't want you to show the arrow in the word FedEx. Right? You see it in a card, don't tell your spouse or your kids. So what I'm telling you right now is you will never see the word FedEx the same way again. Your eyes will automatically gravitate towards the arrow. And that, my friend, you just experimented a paradigm shift. Meaning, I just showed you a different way of doing or seeing something, and for the rest of your life will be impacted. Well, it's the same concept with passive income. Far too many people think, I don't deserve to buy a piece of real estate with no money down, and then all of a sudden, I get hundreds of dollars per month for no work done. My property managers are doing all the work, collecting the rent, and all I get is a $200 a month every single month. Well, you know what? What will that $200 a month pay? Right? So anyways, that's a paradigm shift. You may not believe it. I'm sorry to be the ones to be an asshole right now. Shut up and listen to me, okay? Because I've created it for thousands of people across Canada. So just think of the arrow in FedEx all the time, okay? So Here's another statistic, the last statistic I'm going to throw at you. The average American since 2005 would have not gone into foreclosure or bankruptcy if they would have had an additional $300 a month in income. We're going to go live and buy some real estate together. Well, that $300 a month, folks, is extremely easy to create. That is what could keep you clear and safe of the next real estate crash. So, I don't know if you've listened to my last webinars. I like this drawing so much that I wanted to show you again. Far too many baby boomers come to me and they say, okay, Steve, I need some help. I want to buy a piece of real estate in the States for myself to go retire in. Well, the average property is about $150,000 for something that you'd be happy in. Well, that property will cost you an average of $1,200 per month. Well, I'm the kind of guy that will say you're stupid to do that, because here's what we're going to do. We're going to go out, get 4 properties at $37,000 on average, right? The average property is about $30,000 that I recommend for cash flow, and then you put about $5,000 in a rehab and a couple extra thousands for holding costs. Well, this here will generate you an additional $300 a month in passive cash flow times 4, which will give you about $1,200 a month in positive cash flow. And then guess what you do with this cash flow? It covers all your payments for this property. So I just went extremely fast, but what I'm telling you is, even if you're a baby boomer, listen to me right now, okay? You need to understand that you can't go and add an extra expense on your living lifestyle. Real estate will fall, your equity will dwindle, and if that's your retirement plan, you can't take that equity to go buy one house. But if you're vigilant, you take that equity, let's go buy a few condos out there, okay? Very turnkey, very easy to do. If you don't want to do anything, call my office, guys. That's what we do. We specialize in helping people to buy real estate, or come to my freaking event. Stop being so stubborn. Well, you buy 4 properties instead, generate a passive income, and have a nice little smile like this dude right here to cover for the payment of this $150,000 condo, okay? So anyways, long story short, what is an emerging market? I think I already explained everything to you guys, but it's a metropolitan area soon to explode in appreciation due to a steady population influx, okay? Well, what did I tell you? Why would you get population influx? Caused by one thing, job growth, okay? So we already talked about this. So there's job announcement right about there, right? CNN gets involved, real estate goes up, it's time to sell in seller's market phase 2, okay? So now I want to bring you into the sexy market theory. So here I am one day, one of my mentors tells me, Steve, you know, I know you're doing very good, I can't deny it. You've got, at the time I had like 1,400 properties in the States, but why don't you go into Florida? And I said, well, there's no job growth, there's no economic facts telling me to go into the States, into Florida or to Phoenix. And then Tony looks at me and he says, Steve, listen to your definition of what an emerging market is. I said, well, it's the steady growth of population. Yeah, it's not the steady growth of job growth. And I said, okay, yeah, job growth creates that population growth that I like. So I started looking into baby boomers, and I found this survey. Before the survey, actually, 78 million baby boomers in America right now, 10 million in Canada, 1 billion worldwide. So right now, the baby boomer population is 30% of the world's population. So if you would have invested back in 1940s in Baby Gerber foods or Mattel toys, how much money would you have made? A shitload of money. In the 1950s, if you would have invested or started a construction company that would build schools or infrastructure for children, how would you have done? Phenomenally well. In 1960s, what should you have invested in? The Ford stocks, right? Because they invented the Ford Mustang. Well, in the 1960s, how old were the baby boomers? 16, 18, 20 years old. And guess what? They wanted a nice, sexy car to go, on the cliff and get laid. So in the 1970s, after they got laid, guess what they wanted? The minivan. Okay, actually, this is a step further here. But they invented, you would have invested in Chrysler and done phenomenally well in the 1970s because Chrysler invented the minivan. And then, of course, the real estate boom of 74 Guess why? Because baby boomers were starting to buy homes, okay? So, here's the survey. So if you're to follow the baby boomers, no shit, you're going to make a lot of money, okay? So move, and I know that 70% of people listening to me right now are baby boomers, okay? So think about it right now. If I'm to ask you, what are the things that you want? First off, are you happy about living in Canada? I'm extremely happy, folks. Extremely happy. But what I'm saying is, when you retire, if you are retired, does it matter? Do you want to be shoveling snow for the rest of your life? And the answer is no. 51%, which I think is extremely conservative, because I think there's more Canadians than 51% that want to move into a sexy market. Okay, so a Florida or something like that. So 51% of baby boomers say that they want to retire at least 6 months of the year into a Florida or in a Phoenix or something like that. 58% want to move into a smaller home. 46% want to move where the cost of living is cheaper. Now let me ask you, what is the heaviest cost of living right now? Taxes. Okay, taxes. So if you move to Florida, where are the state taxes? Nada, right? Nevada, Las Vegas, how much is it? 0. Very little in Phoenix as well. And 44% want to build are okay with living in 2 different areas, okay? One statistic I forgot. So out of the statistic, 42%, out of the 51%, 42% want to move into the South Atlantic region, so that's Florida. And 32% want to plan on heading west, so Phoenix, Las Vegas, or a little bit of California. So here's the conclusion. 51 million North American baby boomers want to downsize into a bungalow or condo. 45 million North American baby boomers want to move to a better climate. So that means that 18.7 million want to move to Florida, 14.3 million want to move to Arizona, Nevada, and California. So is that going to create population growth within those areas? What does that mean? How much will real estate prices rise in those areas? Okay, dramatically. So here's one last thing I want to talk about before we go online and surfing for some properties. I want to teach you a little bit about diversification. So we've talked about emerging markets, we've talked about sexy markets, but now how do you understand diversification between both? You can't just focus solely on sexy markets, and you can't just solely focus on emerging markets. So let me break it down. Here's what you should be focusing on. In emerging markets, you should be focusing on the local market. Local market meaning that is your target demographic. So you're not going to sell or buy a house and expect a baby boomer to move into Atlanta, okay? Oh, sorry folks. I'm going to sneeze here. Ooh, excuse me. Okay, so you're going to go and attract the local market. If you're going to go for the local market, what type of real estate are you going to focus on? Duplex, triplex, or quadplex? You're going for cash flow, okay? Which is the exit strategy, long-term cash flow. All right, in a sexy market, who's your target demographic? Baby boomers. What are the baby boomers wanting? To downsize until one level. Now, why didn't I write condos and bungalows? Think about it in Florida, guys. Who's going to cut the lawn for the other 6 months you're not there? Who's going to maintain the palm trees? Who's going to maintain everything? Okay, you're going to have to get contractors, take care of that, extra unnecessary costs. Baby boomers want condos. Okay, that's simple. And if you want a bungalow, that's fine. But think about the other 6 months out of the year. So what is your exit strategy for baby boomers? We've done extremely well. I think we sold 120 properties last year or something like that, about 10 a month, to baby boomers here in Canada. We're selling properties in Florida to Canadians. Okay, we buy pieces of poo-poo, we rehab them, bring them turnkey, and then we sell it to a Canadian. It's that simple, and that's what we teach our students to do. So it's very important to go and to diversify between both markets, okay? Very important. So, Steve, this is the part where you go and buy a deal live. So just a little note for myself. So let's go into the net and start buying some properties. So please take